I'm at the Deal Economy 2012, joined by Steve Pagliuca, Managing Director of Bain Capital and co-owner of the Boston Celtics. Steve, a lot of companies are loaded with debt after the buyout boom. How do you think the maturity wall will eventually be resolved?
Well, it's been very interesting. Most of those companies in the private equity industry have refinanced and really extended that wall out, and they performed amazingly well in this very tough economy. Now, what's interesting, what's different than 25 years ago, the bank structures are much more patient. So it's given the private equity companies time to respond. Also, corporate America has responded. And so you haven't seen a lot of defaults, and they've extended those maturities out by and large.
When it comes to private equity, what's your biggest concern going into next year?
Well, I think there are macro events that are buffeting our country, Europe, China, and we have to be aware of those and really be more microeconomists than macroeconomists and say, can a business kind of get through a downturn period? So those are the issues that we'll be working on. But private equity has done very, very well in periods of downturn because you can get more reasonable prices. Many sellers have to sell for liquidity, and so we'll see some opportunities there.
What do you think is going to be the biggest private equity trend going into next year?
I think you'll continue to see private equity has a global footprint now. Large firms virtually didn't do anything outside of the United States 25 years ago. Now the biggest 5 or 6 firms have geographic presence all over the globe. And there are opportunities in emerging markets, China, India. They probably have emerged already and need infrastructure, need the kind of business acumen that private equity brings to the global picture. So you'll see more money being invested in Brazil, a growing economy. And then private equity will help in this country in terms of growth capital for companies. We're in a very capital-constrained environment today.
We saw a slowdown in IPOs recently. What's your outlook for the IPO markets in 2012?
Well, the IPO markets are always unpredictable. The nice thing about private equity is we have a long-term vision for the company, and so it doesn't have to go public in a year or 2 years or 3 years. It can be just about any time. We're not dying for IPOs. The companies are performing. This crisis took us 10 years to build up this big wall of debt now in governments, where you have Italy, the doubling of the bond rate, you have a European crisis. So people are very cautious, and when people are cautious, both from spending and both in the markets, IPO market is not great. So that could last for a year or two.
Are there any particular sectors that you think will see more IPOs?
Well, technology has been a great sector. It's been great for America, what they've created in Silicon Valley. We're obviously the leader in all sorts of internet technologies and internet companies and social networking. We also have a great medical infrastructure, and there's a lot of low-cost things happening in the world of medicine. So I think you'll see companies perform in those areas.